I'm Kelly Brown-DeBouver, Senior Research Manager at NAI Hiffman, reporting on second quarter results for the Chicago metropolitan area's office markets. The Chicago suburban office market fundamentals continue to post improved results year-to-date, despite a flat performance second quarter. Year-to-date absorption remained positive for the suburban office market, posting 130,000 square feet absorbed during the first half of the year. Second quarter absorption was negative in the suburban office market, specifically in the northwest suburban market, where global aero communications service provider GoGo vacated 100,000 square feet. The overall vacancy rate in the suburbs remained relatively flat from the previous quarter to the current rate of 18.37%. The CBD office market showed signs of improvement over the previous quarter, with positive net absorption of 314,000 square feet. The vacancy rate improved from the previous quarter to the current rate of 11.5%. Construction remains ongoing for 3 new office buildings in the West Loop. The River Point project secured another tenant second quarter. This boosts the tenant roster to 7 tenants, totaling over 600,000 square feet. For a closer look at specific market activity in the Chicago metropolitan office market, I'm pleased to introduce Jim Adler, Executive Vice President at NAI Hiffman.
Several significant leases were signed in the east-west corridor in the second quarter. University of Chicago leased an additional 30,000 square feet. Athletico leased 34,000 square feet. Microsoft renewed its lease of 29,000 square feet. And Kellen Association Management leased 30,000 square feet at Parkview Plaza and Oak Brook Terrace, bringing yet another Class A property in the east-west corridor to nearly 90% leased. The lease momentum in the suburban marketplace is attracting more and more investment, and Blackstone is a great example of that. Blackstone's acquisition of the GE portfolio makes them one of the largest owners of Class A properties in both the East-West and O'Hare marketplaces. As the market continues to tighten, one of the things that we're finding is that there's a limited supply of large blocks of space. And as tenants have difficulties finding buildings that can accommodate their needs, they're going to look to buy land or do build-to-suit projects in quality locations. Lincoln Property and Foxford Community's acquisition of the Clearwater development at York and 22nd Street in Oak Brook is a reflection of the vibrancy of the east side of the marketplace and the potential continued development for more retail and office space. The downtown market also remains steady, most notably in the Central Loop, where one sizable lease of 180,000 square feet to Wintrust Wealth Management greatly contributed to an increase in occupied space. 2 other noteworthy transactions announced in the second quarter include ACGME's lease of 88,000 square feet and Avant's lease of 79,000 square feet at 222 North LaSalle.